to our live trading profile Q&A session. Try to do these every week. And the idea is to just allow us to look at how we use these tools in real time, allow you to ask some questions, and keep moving and ooching your development forward. As traders, one of the things that we have absolute control over is risk. And so we always want to be mindful of the risk when we come into the market. It's really, aside from where we decide to put that risk on in the form of capital that is at risk, it's about all we can control. We want to be mindful of that. Also, people who are, some of you I know are not new to profiling, but for those of you who are, it's an approach to markets that blends a number of perspectives, but really it's most described as behavioral. And so when we think of it, there are people who are fundamental traders. They look at balance sheets and earnings reports and inventory reports, and there are technicians that look at specific price action setups and oscillators and momentum indicators. And we're really just looking at how our participants at all different capitalization levels looking at price in their hunt for value. Couple introductions and welcome. I'm Josh. I'm the founder of Trade with Profile. With me is JP, and we kind of make up the the brain trust, as it were, of this firm. And our process, we're a skill development firm. So traders come to us who are not yet consistent. In your trading development process, there's a number of stages. So first is just, can you be consistent? Can you consistently have an anchor trade, as my friend Terry Lieberman talks about? Is there an anchor trade that you can discern in the market, that you can consistently extract from the market? Then can you do that with size? And then finally, can you express that with breadth? Well, if you're not yet consistent, that's the aim. And it's consistency. It's not 100%. No one is 100% accurate in the market. Can you be better than others? Yes. Can you be successful in markets even with not a strong winning percentage? Absolutely, if you manage the risk well. And the way that we do this is through something we call our profile trading development pathway, which is really a way that we've discerned walking alongside traders, focusing on 3 different objective focus areas. Those are 4 behaviors observable in every auction and how to observe them, 4 questions to ask before entering a trade and how to answer them, which is actually, we're going to talk about the 4 questions today, and 4 stages of auction competency and how to know which one you're in. When you have an understanding of these, know how to see these in these squiggly matrix type charts that we all look at, that look like, I had a friend one time, he's like, it looks like you're looking at heartbeats all day. It kind of is, right? We're kind of looking at the heart, at a heartbeat. Where these overlap is where we find consistency. And we express that daily through something called our trade plan, which is where we put the concepts of our pathway into practice and actually express those and look toward that consistency. So if that's the place that you are and you want to have a further conversation with us, happy to do that. But beyond that, let's jump into our meat of what we're looking at today. So here's the challenge that what I want to start with, we'll cover, and then please queue up any other questions that you have for JP and I, and we'll go after them. But the challenge is, how can I have greater confidence in my trades, keeping emotions in a healthy place, and build consistency? That sounds like a holy grail, doesn't it? But it's a real ask. It's a real place that people go looking for help, where I went looking for help, because in this progression of development from consistency to sizing to breadth. One of the things that's amazing about trading is that I can grow my business by just adding a contract, or adding a lot of shares. I can go from 100 shares to 200 shares and double my business. So having confidence helps you go to size. And some would say, I need to get my emotions out of it. No, I would disagree. I think the emotions are a part of it, but seeing those emotions as data, not necessarily as direction, as Susan Cain talks about, and building consistency. So the concept here is that in active trading and investing, decisions made in the moment are almost always emotional and often wrong. I want to let that sink in. In active trading and investing, decisions made in the moment are almost always emotional and often wrong. Things like FOMO, the fear of missing out, can get you. We had one of those this morning on an early news release that Trump said he's not agreed to roll back any tariffs. Boom, made a big move. So if you saw the big move, big move lower in the equities, big pop higher in gold, if you saw that and you went, oh, it's moving, I got to go with it, you are now at a loss, because the emotion and the in the moment decision led you to get trapped. Or as we were talking about earlier, so I saw some of the guys in the community this morning talking about pikers, the people who are making gambles on small bets and they're getting run over. Okay, so what we're going to look at are 4 questions that you can use to immediately increase your consistency and also keep your emotions in check. And I push back hard on anybody in this industry who says, well, I can guarantee success. And in fact, all the regulators would make sure that we steer clear of talking about guaranteed success. I will guarantee and promise to you that if you would put these 4 questions into practice, you will be a better trader, period. Absolutely, you will be a better trader. And if you don't believe me, use these 4 questions for a month, and then you come back and you tell me that it didn't improve your trading. That's how serious I am about these 4 questions. And these 4 questions are simple. I mean, you can be used, and they can be used to express around any type of trade that we take. We talk about trades within financial markets, but it could be a trade of a job, it could be a trade of a relationship, it could be a trade of an action that you take as a parent. But you'll see these, and they're not complex, but they do work. So here's the first one. What's the opportunity? What's the opportunity? Why am I attracted to this specific trade, or to take it to a job? Like what is it about this potential role I could have that I'm attracted to? Now here's where when I say opportunity, many times when people look, especially traders, look at opportunity in markets, it's because they've looked at a specific configuration of price action that's putting them into the trade. So they're like, oh, because this moving average crossed, this is my opportunity. Or they'll say, because this oscillator has done X, Y, or Z, here's my opportunity. So it's there, but their opportunity is defined on the trigger, not the exit. See the difference? When I talk about the opportunity, I'm talking about what's the target. What's the target? And let's talk about one right now in the NASDAQ that I'm currently tracking. Okay. Get my pen tool here. All right. So yesterday's most traded price was 82.66. We are currently trading 82.29. If we can trade above 82.34, I'm going to look to position myself for a move to 82.66. That is a target. Okay. So, and what does that say? That also says that, actually I need to take a crude here. We've gone neutral.
Good catch.
We have gone neutral. They could make a
reversal,
run.
that is, huh?
Yeah. Same thing in crude. Here's some single prints, some structure that's been, not touched, and we now have some buyer control. So here's opportunity. So I'm starting with where do I think the auction will go, not what's getting me into it. And this is really important. This is where you get edge in the profile, is that I can say, okay, so now we have higher prices. So what I'm going to look for now in Q is I'm going to look for a pullback back into that opening range to give me the best opportunity to get that move. And that lines me up with the second question. So the first one is, what's the opportunity? The second one is, what am I willing to risk for that opportunity? And this is why it's so important that when you define the opportunity, you have to have a tangible, objective target that's reasonable, because then you can say, well, how much risk am I willing to take? The number of people, friends of mine, that have like stocks that they've bought and they're completely underwater, and you ask them, well, like, what was the target? What was the exit on that stock? And you know what they'll say? They'll say, oh, higher. Or they'll say, I'm looking for a 3x return. And you go, okay, well then what's informing that 3x return? Well, ultimately you find out that they just kind of pulled that out. There wasn't a rational thought. They just had this bias toward it's going to move in my favor. And so then they end up doing what? They end up taking on way too much water, because now once you've lost 3x, you know, if you were only get a 3x move, how much would you be willing to risk to go after that 3x? Are you going to take a 10x heat? Are you going to take a 5x heat? Who would do that? I mean, not somebody who's going to be doing this for a long time, right? So we set the opportunity first to then be able to base the risk against that. So now I'm going to go over here and look at a
crude.
Yeah,
ripped.
Yeah, they're not going to give me, so they're not going to give me a pullback enough to get there.
Yeah, you had to be on that one, unfortunately.
That's all right.
That's a nice reversal. Good Lord.
Yeah. Come on. So what we're going to look for is we're going to look for come on. Okay, there we go. So now that I've seen what I want in a longer time frame, I'm going to hide that. I'm going to go to a shorter time frame. And I'm going to say, okay, well, if I've got this 66, what I'm going to look for, and I've got, like, for example, I've got a strong buying order flow. Let's see if this could hold. Maybe this is an opportunity that I could be long, and I would set my stop and defend 24. So, like, let's say if I got in at 35 for 24, I'm risking 10 points to make potentially 30 points. And is it rational and reasonable that I could get to 66? Oh, yeah. Why? Because we came down here into a composite level. We found buyers. The order flow, cumulative order flow, is to the buy side. You know, we still have plenty of expected range left in the day. So if these buyers can hold, there's no reason why that wouldn't work. It's a very reasonable trade. So that then leads into the next two questions. Once you've defined that part of the first two, which the first two are most important. What's the opportunity? What am I willing to risk for that opportunity? And then what would tell me that I'm right? And what would tell me that I'm wrong? All right. So in this situation, if I'm leaning on the buyers, when I say leaning on the buyers, there's a pretty strong buying order flow delta number here. This negative number actually means that there are more buyers than sellers, and a pretty strong, like 21 sellers before, 30 sellers before. This is impulsive. You can see this big 5-minute that should hold if they can kind of pull back into this and find more buyers. So that's the what should happen if this is going to work. I should find more buyers who are willing to keep moving up the cumulative delta number, which is down here. I should see them being able to continue to accept price outside of the initial balance. I should be able to see them holding these areas of high volume. Like, that's all stuff that should happen. What should not happen? We should not find order flow that's opposite of the direction that I want to go. We should not trade back through this base of buyers. They should hold. Okay. So I'm writing the narrative, and I've completely defined the stakes. So if I can find, if you know, and so let's watch this here. If we can find them, you know, this little pullback, find more buyers, then we've defined the trade, and we've asked and answered those four questions before we put the trade on. So what does that mean? That means I've fully defined the trade. Then now I can execute the trade with confidence, and I know where I'm wrong, so I know where to get out, and I will not expose myself to more risk than is necessary, and I'm willing to do that. So now we can watch it. Okay. Conversely, here's an opportunity that I see because we missed the one in crude, because they just, you know, they're running now. Now here's the opportunity that I'm looking for up here. Well, there's only about what, 10 cents of opportunity, so it's too tight to get a good risk on that. What I might like to look for is failure. So current days developing volume point and control. If this thing can't sustain and rotates back, I've got a nice target down here at 56.20. So if they can go up and clean some of these targets I'm expecting, maybe even get the singles here and Globex here, maybe even trade all the way back to this composite 57.15 and find sellers, those would be great places that I could express risk for a nice reward. All right, let's see, buyers, can you defend the IB high? Got a little bit wider IB than we have on average. So I'd like, and here's the thing, gang. If they don't find buyers before, you know, we trade back through these buyers here, you know, I can look for a pullback even all the way back to the current days developing volume point of control, see if that invites more buyers. Or if they just run up here and don't give me a chance to get in, I could also look for potential sellers here for the rotation back lower, because I still have a lower value day than yesterday. Same with crude, value's lower than yesterday. So if I move up higher, that could be an opportunity to get short with good trade location. So this makes sense. So any product that you look to trade, whether it's directional futures like this, or you're looking to invest in a stock or something like that, you know, the question is, you know, first, what is the opportunity, which is defined as where do I believe that the auction will go? And great, that's a narrative. That's a subjective statement. So, but you're adding some objectivity to it in the fact that you're giving a defined target, and you've done the work to know that it's reasonable that you might hit that target. From there, then you can express the risk around that. And then you can decide, hey, is that risk willing? For us, we always try to set up things to at least a 3-to-1 reward to risk ratio. Why is that? If you have a 3-to-1, if you can define and find opportunities and wait for opportunities that are only in that like 3-to-1 or greater, then you don't have to be right every time and still make money, net on net. Right? If you're in a 1-to-1 risk reward ratio, if you have a 50% win rate, you're break even. And if those don't come like a win loss, if you have loss, you're taking on water. Whereas if I'm at a 3-to-1 and I have a 50% win rate, right, I can have a couple losses and the rule of large numbers is still going to be in my favor. And then if you can push yourself north of 60 to 70% positive expectancy with a 3-to-1, then you're really talking. Okay, so those are 4 questions. So with that, you know, if there's a product that you trade often that's other than these products, and you know, we could look at that chart and I could say, well, here's an opportunity that I see, and we could apply those 4 questions. Happy to do that while we wait to see if something can materialize here with either of these products.
Waiting for a tweet.
Well, we already got the release.
Yeah. That's why we sort of wait for the first hour to be in. Because, man, you could have gotten chopped up this morning.
Chopped liver.
Chop suey.
Chopped liver. All right, I see a question. Okay, great question. So what are the auction behaviors this morning, both NASDAQ and CL? So like these 4 questions or 4 behaviors that we talk about, and they operate in all time frames, but and this is subjective, although there are some pretty good beliefs. But here is a rest right here. This impulsive move is a test lower from the rest, there was already a move lower. So first there's a move, and that started from this composite level last night, right at the open. Moves begin from balance. Rest early in the session, then a test lower that was not able to sustain and came back, so that's a failed test. And now it looks like what we're leading into is potentially either another test or a new directional move. And how will we know the difference between a test or a directional move? The directional move will continue to accept directionally. If we rotate back in to this prior balance area, then this was just a failed test. It was a test higher that didn't get any acceptance, just like this was a test lower that didn't get any acceptance. NASDAQ, was really kind of balanced overnight, and then, attempted lower. So this could have been a directional move on that news catalyst. They did not get any acceptance specifically below this long-term composite level. So that's a failed test. And, when the auction finds that it can't go directionally one way, it often attempts to go the other way. But we'll see how much appetite there is for this thing to move higher. And if we can't find a buying trigger before they trade through the base of that last buying spike, then we're back to the drawing board to find a potential entry. The opportunity still remains. And the opportunity will still remain so long as the net order flow stays to the buy side, so long as we hold above 82.12, this long-term composite level. This is all the potential buy window. And we've now migrated value higher on the day, so that's another mark in favor of the buyers. But we got to find the next aspect. All right.
Good stuff.
Yeah.
All right. Have any other questions? Okay, Tony.
Yeah, thank you. Awesome.
Yep.
Yeah, so you can use the Q&A, or you can also use the chat. Either one of those work. We see both of them. And then if we don't have any questions, then we're gonna look here and see if we can find something to trade. Fridays, typically if we don't see something really materialize by 1 p.m. Eastern, we're done. We try to kind of close things down. Volume becomes anemic later in the day. So far, we're above average volume in the NASDAQ for the session, where we are so far. We're about average volume in crude. So the volumes are pretty good. Could lead to some more excitement. As JP says, who knows what else we, might potentially get. Oh man. And I don't want to assume that everybody understands what we're looking at. I mean, obviously we've got crude oil here over on the left. We've got the NASDAQ on the right. This platform is called Window Trader. It has this is a composite volume profile on the right. I typically keep about a running calendar week of data. This is the current day's developing market profile graphic with the contract volume at each price, and it is highlighted based on, oh, here we go. Come on, maybe. It's highlighted based on the intensity of volume. So it allows me to really clearly see where the volume is. And then these are 5-minute bars.
Back to the IB.
Yeah, let's see if they can hold that. Come on, punch it. Punch it, Chewy. With the contract volume, again, highlighted for the intensity, and they're nested inside of 30-minute candles. So I can kind of see both time frames at once. So you can see we've got a higher high for the 30-minute, and I'm looking to see if they buy this trend here. Come on. This is the overnight profile. These are running statistics. This is not these. This is the developing value area. and the developing volume point of control. So I can see how value is shifting throughout the session.
This is the last week, and then also this week's been fairly tricky because we've had, and this is why it's really important to understand those 4 questions, guys and gals, and just also, be really conscious of your setups and stuff. And you got to be rigid in that kind of stuff. You need to understand what your setup is and what you're trying to accomplish.
All right. I'm long. Okay, so my initial stop is at the base right here at 24, and I'm long at 35. And if we can push higher, make a new 30-minute high, then I'll move my stop probably here to 30. Now, what should not happen is we should hold this area of volume. If we push through that really quickly, if we immediately engulf this 5-minute that I just triggered off of, then I'm going to get nervous. So this is part of me keeping my risk tight. Any selling that I see, it should be weaker. It should, like the order flow should be weaker than the buying, which is fine. That's just kind of responsive activity. Let's see what they do.
What you gonna do?
What you gonna do?
Should go up and test that 30.
I think so. I think so.
Let's see how they react to it. That's the thing. When they blow it through there, they blow it through there, then we can get up to 46 pretty quickly.
Yeah. All right. Perfect. Okay. So now we got that new 5-minute high, guys. So now my stop is here at 30.
Oh, bam! How about that?
Yep.
That's what we were looking for.
Yep.
Good execution, good stop placement, good trade. It's a free trade now, guys.
Free trade now.
So,
yep.
And what we mean by free trade is that we're locked in. So even if we stop out, it doesn't hurt us. We either make a couple shekels or we break even, one of the two, depending on how you stop it. So,
yeah. And now note this. Let's just kind of look back here. So here it started with, this was actually selling, and then boom, here was a big buying delta. They're making lower prices, but they're buying it, right? This is the follow through on a 5-minute high. That's your trigger in, but you're defending this until you get another impulsive move. Now we have this new impulsive move. So now I can defend this. What should not happen, and this is how you're trailing that, is what should not happen is this should get follow through just as the other one did, and I'll defend that. That allows me to keep my wrist tight as I'm going towards that opportunity. But now even if I get stopped out, note how much positive expectancy that I've had in the trade. And for those of you, once you get to size, as you get in this pop like that, you can be peeling some off, which means that even if you do get taken back through, you're probably still coming away with some. But I like this. So what things I want to see is I want to see him continue to build contract volume higher as part of accepting these higher prices and this move away from the first hour of trade. Oh yeah.
Yep, I like it.
Mm-hmm.
Crude is also making a new high right now.
Yeah, they're pushing for those singles.
Yeah, for sure. But they're already into them right now.
Yeah.
So they got all the way up to 67.
Mm-hmm.
Is that right? 67. Yep. 67.
Okay, so now I'm going to throw another reference line on here as we're pushing higher, just to give us another reasonable target.
Oh yeah, I'm loving this. Keep going, boys. 46. Keep going. I'm peeling some off at 46 here. So
yeah. So there's some volume yesterday that we could run into some headroom. We've also got a low volume area here that might reject at 46. but we've got 1.5 or 50% extension of the initial balance at 55.75. In the NASDAQ, for example, there's a greater than 50% chance that we will extend 50% of the range in any given session. So pretty good odds still that we can get to that 55, so on our way toward the 66 target.
Yeah, and the reason I'm going at 46 is because it's Friday.
Yeah.
And I'm very conscious of that. Fridays are not the days to be super aggressive. It's a day to take a trade, be very mechanical with it, and get your profits and get out of there. Because the last thing you want to do on a Friday is take a loss. And it doesn't mean you can't take a loss. What you want to do is make it a controlled loss. Okay, just like what Josh talked about earlier. Know the trade setup. What's it trying to do? What are you willing to risk? The questions. And I agree 1,000% with Josh on that. This is something we are adamant about. This is part of the plan. If you guys don't ask yourself those 4 questions, it's I don't want to say it's impossible to trade. It's going to be very difficult. So
it will be, if you're frustrated with why am I not yet consistent, this is a key factor of why you're not consistent, is because there's not enough rigid process that you can then assess every trade. I guarantee you, if you go back and you look at your trading logs and the trades that you took, you'll find that most of the trades that you took, they were impulse. They were absolutely impulse. By putting on a trade and
guilty
defining
as charged.
Oh yeah, I mean I say that because I have been that guy.
Oh gosh, yeah. Everyone, why did I tell you I told Josh this, guys, earlier this year. I at the end of every year, and you should do this as well, review every trade that you've taken. And I'm going to say 90% of my losses last year were due to what Josh just said. Craziness.
Yep. Yes. Okay, Michael, I see your question. Michael's a great trader, by the way, and has done a really, really good job of just being consistently diligent at moving towards greater skill. So the question is, do you have a rule or definition of acceptance, or do you rely more on experience and intuition, watching how price behaves? It's a great question. So
yeah,
what is acceptance? So in an auction, for an auction to continue, so the auction will move directionally in an attempt to advertise price, and it can continue to move in that direction if if those prices are accepted. That the best analog for that is a housing market. Okay, housing prices will go higher if people are willing to do business and do transactions at those higher prices. When do housing prices start to tail off? Is that when people are no longer willing to participate in those prices? Like in where I am here in northern Colorado, there's all different types of houses. You can find what types of houses are largely being quote unquote accepted by the community based on where you can find the most transactions. So right now that's about 350 to 375K. So those houses, man, they move fast. You get above that, you get to like 500K. I mean, they're still moving. But if you get above 500K to like 600K and up, I saw there's like 5 houses that are up for like 2.9 million, right? Those are not moving. They're not liquid. Those prices are not really being accepted, and those are actually places you can get a better deal. In fact, I just saw this week Regis Philbin sold his house in Connecticut for a 36% loss.
Ouch.
Because it's not liquid.
Really?
Oh yeah. JP and I talk about this. Give me 5 houses at 300K over 1 house at 1.5.
Yeah, amen.
Because I could live in a bunch of different places, and I could liquidate all of them and not feel the heat. So
well, I gotta tell you that. Go ahead.
Oh, I was just saying. So when we see that, that's the analog. So we look for the same thing in the auction. So whereas price has been accepted so far today, is they've been accepted here. What's cool about this tool is that early on, prices were being accepted at 82.12, and they've been able to move acceptance higher. So that movement here is telling me that we're doing a good job of accepting higher prices. But for the auction to continue to move higher, to get us toward our target, what would need to happen? We would need to continue to build out volume at these higher prices, or we run the risk of, as is what's, potentially happening, especially if we trade right back through the base of this last spike, is that we've not been able to facilitate trade up here, and we could then now go into rotations back lower.
So in the sense of what Josh is talking about with relationship to the real estate market, for example, we're moving up because people are willing to pay that price for it at this point. Okay, so it means its price is still pretty cheap in their eyes,
Yeah.
right? And we haven't extended the market so far. The other one is also volume. There's volume in here that's helping it as well. And you're talking about Regis Philbin losing 39% on his home because there wasn't enough volume and enough people that are willing to pay that money for it. So price is not going to get to that level. Okay. And therefore he's going to have to keep lowering the price, and that it's sort of like chasing the market down a little bit, right? I've got a sibling who owns a $2 million home. Not that that's impressive, because it's definitely not. Okay. It's in a town where he's going to lose money on that home because there's not enough volume of people that can buy a home like that. So he's going to have to wait a lot. I'm talking maybe a couple years to get that home off the market, even if you take a loss on it. So when you look at that, is there acceptance for price? That's why Josh and I say, well, we'll take 5 homes at 300,000 across the market. We'll have one in Hawaii. We'll have one in Colorado. It makes more sense because they're more liquid, that we can work with the pricing around that. We're not going to have we're going to have the volume to be able to move a home. Okay. So pricing, acceptance, and movement are based on those things that like Josh just described. And now we can see it on the charts because it comes in the form of volume. So we can see the profile build out, and that tells us where, for one, where price has been accepted in the past and where it may go in the future sometime. So that's a great question. I don't think we've ever had that question.
Well, I mean, that's how sharp Michael is. I'm telling you.
Yeah. Man. He's also got a good sense of humor too.
Yeah, he does. Fantastic. Fantastic sense of humor. Okay, 56.80. That would close the gap.
Crop report. Oh, yeah, I'm not going to trade that. Sorry. So that's a great question. Crop report may provide some opportunity. It definitely may. It is a Friday at 9 o'clock in the morning, my time. And I'm done. I took that trade. Josh and I just took that trade, and I'm done for the day. I'm done for the week. So, and that's my rules. And that's part of my playbook. I've had way too many times in my life where I spend early afternoon and on a Friday thinking I could get a trade when there was just absolutely nothing there. And yeah, I like early weekends myself personally. I gotta go look at that anyway, just I haven't seen that.
Yeah, I'm loading it up here just to get ready.
We still have 45 minutes on it, don't we? It's Eastern time, 12 Eastern.
Yeah, we got time.
Yeah.
We got time.
Now they're actually selling crude or soybeans off this morning, huh?
Yeah, so
they know something. The Duke brothers must know something.
The Dukes are in the orange juice.
That's right. What are they doing in there? Sell.
Yeah. WAS report coming. All right, come on, buyers, defend that. I don't think so. So I can tell that we're about to go.
Looks like they're trying to push it back through.
Yeah, I think we were at like a 400 number on this 5 minute. Now this is 400 to the sell side, so we're now actually almost back to net negative for this period. We'll see if that shuts it off. They just look. Who is this dude up here with 12 contracts? He just got stuck.
Somebody who's hoping and wishing about right now.
Hoping and wishing.
And I probably am guessing he's not covering at that level.
Yeah. Yeah, and let me just say, just because somebody does size, it doesn't mean that they're right.
No, not one bit.
I mean, number of people that
size we saw. Yeah, so let me talk about size. You said about that, and listen, everybody wants. And here's what, if you're looking to make a living at this, you're going to have to trade more than 1 or 2 contracts. Okay. And preferably a multiple contract, like 2 or 3. And the reason is that so you actually can control risk a little bit better because you can peel stuff off and lock in some pricing rather than trying to get a 1 lot and run for 30 points. It's very rare that you'll be able to do that. But you can start with that. You start with 1 lots, and you have to start somewhere. I get it. Okay. However, when you start trading size, and this I'm just going to tell you from experience, when you go from that 2 lot to 4 lot, it's like you started trading all over again. It's like just like you went from sim trading to trading a 1 lot or 2 lot, because it's like, oh my gosh, I just doubled my thing. Now and again, this, we talk a lot about the psychological portion of it. This is where psychology really plays a part, because you've doubled your contract, which again, of course, you have your emotions that kick in, the fear kicks in. Oh gosh, I could lose double my money now. In actuality, you still need to execute on your trade plans, the same trade plan that you trade with 2 contracts. And now if you're doubling the 4 contracts, you still need to execute that same plan as if it's still 2 contracts. That's the tough part. That's it's like jumping across a creek. When when you were young, you just jump across and you didn't care what happened. Then all of a sudden you get a little older and you're like, oh, I could fall and get wet, hurt myself, right? You still have to jump, all right? And you have to do it unconsciously in some respect. And so again, this is why it's important to, again, use the 4 questions that Josh talked about. Also have your plan set, because what you don't want to do is just be willy-nilly, like, oh, I had a couple good wins this week, I won some money, I'm going to go from 2, I'm going to go to 6 contracts next week because I really want to get out of my job. That's probably not going to end well for you. And can it happen? Oh, absolutely, it can happen. But you gotta, it's a step-by-step process. Now that's what we help. Obviously, we work with the guys in the Slack channel on, but that's a step-by-step process. So don't be jumping contracts up until you have your system down, until it gets so boring that you're like, this is boring. Yeah. I'm making money. I need, I'm, et cetera, et cetera. But if you're trying to push to make money,
all right, hey,
okay,
stop.
I would caution you to change that view a little bit. Instead of working on money, work on the 4 questions, put that into your trade plan, work on your execution, make sure you have a good trade, or a good trade book, and a book of trades that you rely on. And you know what, Josh, correct me if I'm wrong, and I know what you're going to say about this, is that you really only need 2 setups to be really successful in this business.
Yeah,
I know guys who use 1 setup and they own that setup so well they could do it in their sleep.
Oh yeah. Yeah. All right, perfect. What should not have happened? This was impulsive buying. What should not have happened? It should not have traded lower before it got followed through higher. So that's especially when you're trying to be active at the high of the IB up here. That's okay. Now, does the opportunity still exist? It does, but I need to find a new catalyst to re-engage this chart. And now, I mean, if we sustain here in the initial balance, I may look for an opportunity back lower, but given that it's a Friday, I'm probably not going to. But I hope that was helpful as an illustration.
That's
sugar.
Awesome.
Sugar.
Sugar. I haven't heard that one in a long time.
Well, my buddy Miro, he loves the sugar. As although he's in Canada, I'd say if he's an American, he'd like really love the sugar. But
yeah.
So I'm just looking here. This is a daily chart, continuous chart in sugar. Not a very liquid product. This is definitely not something you day trade. This would be something that you would swing trade. But what I find interesting is that from the last big swing high to the last swing low, this is the profile from a composite. And note that when they rolled to the new contract, they came up and they had trouble getting above where. And then recently they've had trouble getting above where. And right now we're trading 1243. Okay. So there is a node down here in terms of opportunity. I think if you found a trigger, You could definitely try to defend. I would not want to see prices above this level and look for an opportunity this way. So if you had, if you believe that the auction was moving lower, that would be kind of the opportunity that I would see. That would be the risk that I would be looking to do against that. If they get above that, since we've tried several times to get above this, if we could get above that and hold, that could open the door. There's some poor structure up here, all the way potentially up here to 1389. Now, but look, how long might that have to take to get there? That's not going to happen overnight. That could be weeks and weeks that type of trade would take place.
Yeah, sugar's a great swing trade. I wouldn't intraday trade that thing. Save my life.
Nope. I don't know if you saw the comment from Mark, talking about, when we see impulsive activity, we don't know if that's like a hedged activity. Like we don't know if it's like, it's in terms of discerning what that is. You don't know. And you're absolutely right. You don't know.
And
you'll know that if it was like in this case, if it was strong enough to invite, if it wasn't strong enough to bring more buyers, then that wasn't what the follow through is always helpful. I find it interesting. ES was unable to make its IB high. Huh.
Yeah.
Très interessant. All right, gang, we got 10 more minutes. What else can we cover real quick? While you're thinking about those questions, let me just kind of cycle through the last bit of stuff. So those are the 4 questions. Please put those in practice. And I would love you to define a trade using those 4 questions. Write them out. Like here was my opportunity. Here was my risk. Here's what I would tell me that I was right in the trade. Here's what would tell me that I'm wrong. I mean, you're a storyteller, because when you're trading when you trade at the hard right edge of the chart, you're a storyteller. You don't know what's going to happen. Nobody does. So it's a narrative that you're building. Now, are there better storytellers than others? Absolutely. Absolutely, they're better storytellers than others. Are there people that understand the dynamics? Absolutely. So you get better at this, but unless you have a process like this, it's hard to know what to tweak.
So that you make a good point. I just want to actually not clarify, but talk about that. So we work off the hard right edge, and we're a storyteller, so we don't know what's going to happen. And people say, well, then why would you even do that if you don't know what's going to happen? You're a gambler. No, we're not gamblers, because through those 4 questions, we can establish risk. And the risk reward profile that you want, allows you to play within probabilities. And now we're working some math on our side. And when we do that, and we do it consistently, we can win with a fairly low win rate. Everybody's out there, well, what's your win rate on these trades? Well, I'm going to sit here and tell you, I've seen people who have had 70-75% win rates and still lose money.
Oh, yeah.
Tell me how does that happen?
Because they're engineers.
Well, that's true too. But no offense to engineers.
Yeah, it's not. It's a occupational hazard.
Yes.
Poets make better traders than engineers, because
so does housewives, by the way, or any type of female. I'm sorry, but the females are really good traders. And if you're a female in here, I'm telling you, you're going to be a great trader, because females have an extreme amount of patience. So us males, man, we chase everything that moves.
Well, and they can handle emotion better.
Oh, absolutely.
So, a number of engineers that we've worked with over the years, they build extremely good approaches and rules. So good, in fact, that they have things like an 80% win rate, but they still lose money. And the reason why is because when the trade goes against them, they can't believe it. They don't believe it, and they will push that, because they were like, but I set all the right conditions. I should be right. So 2 things. Either you, if you have an engineer mindset, either you need to explore algorithmic trading, where you can set the hard rules on your wins and losses and let the thing just auto trade, or you use the 4 questions, because using those 4 questions primes the brain to be able to act accordingly when the thing doesn't go as it should. Because
Yeah.
the brain, from confirmation bias, from cognitive dissonance, once you're in the trade, the brain wants to be right and the brain wants to stay in the trade. So if you don't prime the brain by taking these steps first, you're diminishing your potential for return.
So great question, great comment. And so the thing is, why is that? Because that's the way we're developed as humans. Okay, so it's not something that's wrong with you, and just understand that. So we always tell people, if trading doesn't work out for you, that's okay. It doesn't mean you're a bad person. That's just the way we're hardwired. And so what we're doing is so why trading is so hard? Because we have to sort of rewire our thinking a little bit from being right. And I always go back to education, right? We're in the US. If you're not in the US, I can't speak for your country, but in the US, you get graded A, B, C, D, and a big fat F, right? And that means you have to be right. Get the A's, you have to be right. You have to answer the tests on the questions on the test correctly. You have to be right, or they're going to tell you you're wrong. And nobody wants to be wrong because it's embarrassing in class, and you don't want to be known as a failure and all this kind of stuff. You know what? In trading, guys, it's not looked at as a failure. A loss is not a failure. It just means it didn't happen, okay? It means price did something else than what you thought it was going to do. That's all it means. You will take losses, and you cannot always be right, and you don't want to be right. You want to make money. Okay, I'm going to go right back to the beginning of this call, and Josh outlined it beautifully with 4 questions. Put those in your plan. I challenge you. If you don't, matter of fact, come back next week, this call, same bat channel, same bat time. Okay, and I want you to use those 4 questions next week, other than Monday because we're closed. It's Veterans Day. I want you to come back, and I want you to report on that. If that didn't, I'm not promising you, Josh is not promising you it's going to change your life tomorrow, but I want you to come back and tell us, did it make a difference? Did it actually clear some things up for you? Because if it didn't, I want to talk to you personally, because something's not right, because it should, and it should happen immediately. So, I mean, don't be right, please. As a matter of fact, it'll, no, I mean, some of you may not know the story, but my wife was a trader for a long time as well. And if you have a wife that's a trader, that means you got somebody in your ear constantly. And some of you may have wives and spouses, and you may not want to share the trading with them. And I don't have that luxury. I have to share every trade I make with my wife. So not only do I make sure I answer 4 questions, I make sure and double check all my trade plans, because I know I'm going to have to answer to her. So if you have somebody to answer to other than yourself, that also helps.
Mark, I see your question. Is there anything to carry forward that the ES has been within IB range all week? I don't know. I mean, we were outside of IB range yesterday. We were neutral. We were neutral the prior day. So those have been outside of IB range. I mean, we're inside the IB range today. And the only takeaway there is that there's not enough other time frame trader willing to extend the IB and try to sustain that. Oh, in terms of it went back into the ranges on those days? Well, I mean, the takeaway there is that most often the auction does. I mean, in fact, if you want to hint on an idea, and you can go look at our other Q&As we talked about, when you get outside of the initial balance of the auction, it very rarely, like right here, crude oil has tagged 2 times the IB at 56.72. We're kind of in a trending behavior here in crude. I'd have to go back and check our stats, but I think it's about a 17% chance that crude can hit 2x the IB over 1,000 trading sessions. So most often we get what we call normal behavior, where we're rotating back inside of the initial balance, which is why you want to be really careful if you're active in the expansion past the IB.
Time is at 9:28. So we're still not closed. We're a little bit closer to close on crude, but there's some real selling on this last spike up. They haven't dropped that 8 EMA since early this morning, so there's probably some algorithmic behavior in here.
Other things to say about the IB, so that 80% of your contract volume from Globex open until close this afternoon. That happens in this first hour, the RTH hours. So, the big desks, the big funds, the big algos, they're all active in that first hour. You just can't see them really until you get past the first hour. Because what happens is, like here with crude, they pushed IB low, couldn't get any follow through, pushed IB high, everybody kicks on, and then they jumped in on that, and then people are piling on, not necessarily other time frame money, but more short term money is trying to pile on in and follow that momentum. And but if you get outside of that initial balance, while that tells you who's controlling the behavior, and we all, as a general rule, we always respect control to whoever last extended the initial balance, because that's where we could see, oh, there was buyers there that they had enough control to extend, to get people to extend the range. Doesn't mean that I'm not going to take a short. In fact, with this weakness here in Q, if we make another low, I'll be, rather than trying to go with pushes higher, I'll probably be trying to fade them. Just because we tried to get outside of that and struggled. So it doesn't necessarily mean that's the direction you take the trade. It just means you recognize who the control is.
Yeah, if they defend that IB, I think that's, the risk is there, of course. Not for me. I'm done. I'm shut my dome down. So, guys, in the end, I know we're rolling down here to the bottom of the hour. The idea is we talk about a lot of different things, but the idea is what you need to do and take away from all this is, one, you need a structured environment for your trading. In other words, you have to have a plan when you come into the day. And if you don't, you're what we call a piker. We talked about it in the channel this morning. The piker is just a gambler. You're just going to the casino. I suggest taking your wife out to dinner, your spouse out to dinner. It's a lot cheaper. And also keep it simple. Okay. If you looked at our plans, they're simple. I can't stress that enough. Don't try to complicate this with, too much on a chart, because you'll drive yourself in the ground. You won't be able to make a decision. We use a lot of if-then statements, like Josh was just talking about this. So obviously the IB has failed on the NASDAQ. It's pretty clear. Now, the next logical move now, 44 to, well, we've 20 points actually almost to the thing. So 44 down to 24. So, logically speaking, if they defend that IB, that's that could be, if it's in your plan, it could be an opportunity to defend those highs and, get short into the close. But it's got to fit within your plan. That's a simple trade plan right there. It's an if-then statement. We saw the initial balance get taken out. We were looking for the trade long. We got it. It was a great trade. It was a quick trade. It didn't go, of course, we'd like a 30-point trade. It didn't happen, but it's Friday, and we expect that kind of stuff to happen on a Friday. So now we've broken down the IB on a clear failure. Let's see how they react at the IB and then go from there, just like Josh talked about. So we're going to keep it as simple as possible. And I suggest you guys do too. I think you'll find trading to be a little bit more successful for you if you do keep it simple, and then apply some of the things that we talk about every week here. I mean, we hope that we were able to provide you with some solid knowledge of the markets and what you can institute into your plans immediately. And I'm gonna go back and say it again. Those 4 questions you can implement immediately, and do it this weekend. Look at it and review a couple of your trades this weekend, and go back and see if you established those four questions. And if you didn't, then it's time to put them into place. Would you agree, Josh?
I would agree.
And then go skiing like Josh.
And then go skiing. Yeah.
Because it's going to be 90. It's going to be 90 degrees here while everybody's freezing. So I'll take it.
That's right.
I'm going to plant fruit trees this weekend.
Nice. It's a good time to get them in the year, in the ground.
Yeah, it means I got to dig holes, which is no fun.
Oh man. Couple next steps for you. If you've not yet been part of our community or experienced what that's like, see what those plans are during the day, we give everybody a free week with us, just to work on these 4 questions, get some additional ideas, and move forward. We are on the Twitter and Facebook. And if try to be active. Just if you have questions, try to get back to you. Team@tradewithprofile.com, or you can give us a call or text at that number. Happy helping. Thanks everybody for your questions, your participation. We'll get the recording out to everybody who registered. I'm gonna probably get that going here right after we get done. So hopefully this afternoon we'll be out, if not tomorrow morning. And everybody enjoy the day off on Monday. And
Yes.
we'll look at see what the rest of what the weekend and the rest of the week brings from there. But have a great weekend. Peace.
All right, take care.